a large cap pharma stock which was there at 1500 level by 2020 and it has gone to 5300 by 2022. So almost a 3 times return, more than 3 times a return within this short period of time, these 2 years. This was the COVID period and that was one of the most famous stock, nothing but Divisstock. You know about that. It is a darling of most of the investor. And guys, today we are going to talk about why this stock which has gone up to 5300 has fallen to almost now around 3500. What are the reasons behind it? Why there is a 33% fall in the stock price? And again, from here, how much it will go, whether it will go up or down, or it will be in a range bound. Guys, I am getting lot many questions from the investor about Divisstock, and today we are going to cover in detail about Divisstock. So stay till the end. It will be very informative video. And guys, I welcome you all to my YouTube channel. My name is Tapandosh. If you are still not subscribed to our channel, please click the below link and do subscribe to our channel. So let us start about Divisstock. Now talking about Divisstock, I already told you that it is a darling of most of the investors, and still many of the investors are there invested in Divisstock at a much more higher value. Now it is fallen, and that is the predominant question. What has happened to Divisstock? So let us take and understand why the first of all the stock has gone up over the years. So if we talk about Divisstock chart, you can see here by 2020 it was around 1500. It has gone up to almost 5300 within a span of 2 years. Now you know this was the COVID period, and Divisstock was one of the main manufacturer of one of the COVID drug, antiviral drug, and that's why there was a big jump in the stock prices. Now if you can see here, 2 years it has given a very good return. Most of the pharma companies has also given a good return doing that, but however over the years then there was a good fall. So from Jan 2022 that was a peak. Now it has fallen to almost 3500. Now what are the reason? If you talk about the reasons and all that, if you see here, if we talk about P ratio, guys, this is very interesting thing to understand. The by 2020 when the rise was happening of stock, no, it has gone up to the, and it has gone up to almost a P of almost more than around 110. Just to show you 1 minute, let me show you the what was the P. The P was almost around 70. Okay, so that was the 70 P was there, which was a very high P. However, after that there was a normalization. It has come down to almost 29 P. Now you know what is P. P is nothing but the price to equity ratio. Now if you can see here, this is strange because you can see here the EPS is going up. Now this blue line is nothing but the EPS. Okay, then why this P ratio is going down? See, one of the main reason why the P ratio is going down is because there is a normalization in EPS that is going to happen in future. And when the market start thinking that okay, now in recent 1 or 2 quarter the margin will be at a peak level, at that time the stock price will start falling down. And that is what you have to keep in mind, that when the market thinking that okay, the future projections or the future prospects of the company is not so great as it used to be earlier, then the stock prices will start falling. And that is what happened at the P level. And you can see here the P started contracting. However, what happened afterwards? Now this is also interesting. You can see this is a typical case. Now it has gone up to 30 P. Again, now it has jumped to almost 69p again. Now you may tell Tapan why? Because if you see, this EPS is actually going down in few quarters, correct? So why this has happened? See, what is P ratio? P ratio is nothing but, you know, market price divided by EPS. So if EPS start going down, P ratio will go up. Now does it mean that this is good for company? No, it is not good for company. The reason is simple. At such a high P ratio, the company cannot sustain. The chances are that the P ratio will again contract. And this is what the problem is happening with Divisstock. Suddenly the P ratio has jumped because the EPS is going down. Now let us talk about the PNL. Talking about PNL, if you see the quarterly result, guys, this is the quarterly result. Okay, now you can see here the revenue is not going up. How, if you can see here that it was 1961, it has gone up from 2021 to almost 2518. But however, after that there is a downward trend only, and currently it is around 1900. Even you can see here in March 2022 when COVID was there, at that time you can see the OPM, operating profit margin, was almost 44%, which has dropped to almost September 20, almost 25%. The quarterly result was out few days ago and it was not at all giving a good sign. If you talk about net profitability, see in the you can say June 2022, okay, and March 2020, the profit was around 895. That was around 900 crore rupees. This is what was there during the peak time. Now you can see it is almost one third, almost 348 crores. This is not showing a good sign. Why this has happened? Because the volume which they were getting earlier during the COVID time, because of the demand of medicine, now it is shrinking. Then you may say, Tapan, then what to do here? The only thing you have to think about is what is going to happen in future. Another point we have to keep in mind here before we talk about the future is nothing but what is the currently PE ratio and how it is been compared with the other companies. So if you talk about Divi's Lab, you see the PE ratio is currently around 70. If you talk about Lupin, it is 57. Industry PE average is around 27. So already it is too high. Again, EV by EBITDA, which is another main indicator to check. See, in pharmaceutical company, 3 points you have to check it. What is the P ratio? What is the EV by EBITDA? Okay, and ROE. Okay, these are the 3 main indicators you have to see. Also, if you want to see price to book value and current price divided by sales, also that also you can see. So if you talk about EV by EBITDA, it is highest amongst the peers. ROE is around 14.89, which is okay. But there are some company which is doing better. Also, current CMV divided by book value. Okay, price to book value is almost 7, which is quite high. Now you may thinking why it is such a high price to book value. The problem is the rate at which the EPS is falling, the rate at which the profitability is falling, the market price is not falling. Somehow market price is holding, and that is why you can see the current CNP divided by book value also 7.3 times. Normally the market price should sink also. That is not happening. Even you can see current CMP divided by sales almost 12.73%. Now this is quite high, 12.7 times. It is quite high, and that is why all these indicators, if you see here, when we compare with the, you can see the competitors, I think it is much more on a higher side, and that's why valuation wise, even the stock price has fallen by almost 30-35%. Valuation wise, currently Divi's Lab is not giving you comfort because the current earnings is not coming good. Okay, last earning was also quite down. There was a much drop in the profitability, and that is what is happening here. So keep this in mind before investing. Now you may say whether I should invest in this company or not. So talking about that only, let us see some ratios. So if you see here, of course, this chart is taken from Motilal Oswal report. Now, if you see the revenue growth is actually declined from 2.9% year on year. So you can see here the growth is declining. This is the sales and this is year on year growth. Okay, so here you can see here there is a drop. Okay, this is what drop is happening among the revenue, and of course now it is almost 2.9%, which is not a great growth. Of course, it was peak during financial year 2022. Now, if you talk about what is the segments, see here in if you talk about general API is having almost 60% segment, custom synthetics is having 40% of whatever total manufacturing they are doing and sales they are doing. Also, if you talk about in last, you can say that maybe 5 to 6 years, the revenue growth has been going up. Okay, sorry, earnings are going up around 8.5%. Now, projection is that they may grow at a 14% in future. But yes, the revenue growth is currently quite muted if you take an average of last 5 years. Of course, if you take that between 2020 to, it was quite on a higher side. Then also from here, how the take will be, if you see ROC also moderated a lot from 24 to 27. Now it has come to almost 14.1. In future also, it is not going to go up easily. If you take about the management key takeaway, as it is told, the capex at unit 3 is progressing well and production expected to commence by Q1 financial 25. Divi's Lab has almost 87% of business from export, and US and Europe contribute to 68% of export. And you know that US and Europe, yes, of course it is recovering. So slowly and gradually, if you talk about last 8 months to 10 months, yes, their sales are also increasing. But somehow the COVID sales was so high at that time, no, it is not able to compensate the growth which are they having in US and Europe. So the earlier the COVID period was having a higher growth, and that's why when you are making a year-on-year comparison, it is looking much more down. And at that time, whatever higher P ratio was given, it is moderating a lot. Overall, the current work in progress financial 24 is around 4 billion. Again, cash of 36 billion at the end of quarter 2 financial 24. So these are the some of the major commentary of Divi's lab. So now you may say, Tapan, as an investor, what should I do? Shall I stay invested in the stock, or shall I get out, or shall I add a stock? Well, my simple advice to you is that, guys, stay invested, but do not add any stock. Okay, because from here I don't know when the jump will come. Again, if you want, if you're patient, then only stay. But if you think that yes, better opportunity are available, you can switch to that opportunity, because still next 6 months or 1 year does not look good for Divi's lab. So if you are patient enough that okay, I can wait for next 2 to 3 years, let the company get recovered, you can go and invest in this company. Yes, this company has given you multi-bagger return in the past, but does not give you an probability of high success ratio in future also. And that is what you have to think in the market, guys. Whenever the valuation is reaching all-time high, and no, it is like no very superficial valuation, you have to think about getting out, because when the earning goes down, it will have a big impact on the stocks, and that thing you always have to keep in mind. So here, if you talk about pharma sector, I think better options are available compared to the Divi's lab. Or you can talk about, I've given a few videos earlier also. One video was there on Sun Pharma and Cadila. I think they are having a better option compared to Divi's lab, because Divi's lab is not giving that type of comfort which all these other stocks are giving. And that is why my suggestion is that before investing, think twice, and please do not average the stock. I don't recommend to average the stock, because you don't know when this fall is going to happen. Okay, till what time it is going to happen. So friends, hope you like this video, and if you like this video, just type in the chat box whether you have a Divi's lab or not, and what do you think about this video, what you learned about from this video. And also, if you want me to analyze any other stock, do mention in the comment box. And guys, if you want to understand how to do a valuation of a company, how to understand what are the things to be keep in mind while selecting a multi-bagger stock, I do conduct a workshop every week. The link is given below. You can click that link and join it. The costing is around 1500 rupees, but we are giving you completely free. So I want you to click that link and do join our workshop. So thank you very much for joining, guys. I'll see you in the next video. Bye bye.